Now friends, come to this particular question. See, in this particular question, Shri Narayan Swami is a chartered accountant practicing in Bangalore. Okay, and he has already given us all the receipts and all the payments. Okay, and in the receipts and payments, what he has given us is opening balance of receipt payment account and the closing balance. Okay, so he has not given us profit and loss statement. What he has given to us is a receipt payment, and accordingly we have to answer it. Now, as I always told you, that wherever there is a question which has given us all the receipts, payments, or expenditure and incomes, we can always follow something like income minus expenditure format of presenting the answer. This is one way. Okay, or you can start with profit as per P&L and do the headless adjustment. I always prefer profit as per P&L and do the headless adjustment. However, in the given question, the clear-cut profit and loss is not printed. So what I can do is, I can take the closing balance, that is 60,000. Okay, this closing balance 60,000 and opening balance 9,500. Okay, so I can say that what is your surplus in your receipt payment account is 60,000 minus 9,500. So it is going to be 50,500, and to this I will do all the headless adjustments, and I will present my answer. Okay, now he has already given us all these many, some 10 or so adjustments. So first of all, I will like to answer all the adjustments, and after answering the adjustments, I will go to all the receipt payment items and check it out whether it is all business purpose, wholly exclusively for business and profession, section 37(1) test, is there any capital expenditure, and all that I will do it in the second stage of answering the question. Okay, now let us come to the basic data. He is a chartered accountant practicing at Mangalore. Receipt payment has been given to us. Gross total income after taking into account the following. So he's asking you to compute the income. Okay, so you start and open up with your answer. Say that profit as per P&L, or you can say excess of closing balance over the opening balance in the receipt payment account. Okay, and that is 50,500. Start, open your answer, do these headless adjustments. Okay, and let us start with all the adjustments. And I already told you that whatever that explanation I'm giving you, that is basically your notes to the answer. Okay, every answer has to be given just like as if it's a theory question when it comes to the taxation paper. Okay, now silver coin received from client during the course of profession is worth 5,000. So straight away 5,000 rupees you add. Why? Any benefits or perquisites out of the carrying on of business and profession, section 28. So it is a benefit. And why I'm going to add it? Because these 5,000 rupees is not included in your receipt payment account. Okay, and because it is not included in receipt payment account, now I will include this as my income as a matter of adjustment. Allowable rate of depreciation on the motor car is 15%. Okay, so I think he has purchased some motor car where he has, one second, let me check. In this purchase of car, 80,000. Okay, so on this particular car he is going to get the depreciation. So 15% depreciation given. Now half rate, full rate, number of days used during the year, all that data is not given to us. So straight away I will say that 12,000 rupees depreciation, I will reduce it from my profit. Okay, that means my surplus basically. Now third, municipal value of the house property is rupees 42,000. This house was self-occupied for residence for 4 months during the year. So this is straight away your house property income. Okay, municipal value has been given. Now actual rent, somewhere they might have given actual rent for 8 months. So house property computation I will do it afterwards. It is basically your after considering all the house property points which is coming into picture. But right now I will say that okay, I will ignore this particular point because right now I am focusing on the business income. Okay, so house property computation I will keep it in my back memory. Then assessors incurred expenditure relating to the exempt income, and same was charged to personal account. Same was charged to the personal account and not debited to the P&L account. Now, expenditure for the purpose of earning exempt incomes are not allowed as a deduction while computing the taxable income. In the given question, we are already saying that this is not debited to the P&L. So that's okay. So anyway, expenditure, I have not claimed it. Okay, and because I have already not claimed it in my income expenditure or receipt payment account which is given to me, so that's okay, fair enough. It is not debited to the P&L, and that is the reason I don't require any adjustments, because it is anyway not allowable, and anyway it is not there in the receipt payment. So no adjustments is required, but the note, the clear-cut note has to be given. Point number 5. Kashmir tour with wife, 5 children, 2 servants would reasonably cost rupees 50,000 in view of the assessing officer. Now, see, he has already spent some money in the question Kashmir tour with family, and he is saying that the expenditure is only 3,000. Okay. Now, there is one small little chapter, rather I call it as a chapter only, and in our business income there is one separate discussion, detailed discussion. I have it on that particular point also, but right now it is coming across, so let me finish off the discussion, the major discussion right now only. It is called as a chapter of a deemed income, a separate chapter that we have to learn. Okay, certain situations of deemed incomes. We call it as section 68, 69, 69A, 69B, 69C, 69D. Okay, all these sections are very popular, very practical, very small sections. The theory was, it is not a great sections, very small sections, but it is a very practical kind of a situation. Okay, understand the situation, what the law says. Okay, these are all situations of deemed incomes. All situations of deemed income. That means if this condition is satisfied, income will be deemed. Okay, and it will be taxable. Now, section 68 says that if there is any unexplained cash credits, okay, cash credits, that means basically any credits in your books of accounts. I repeat, any credit, whether it is a balance sheet item, whether it is a P&L item, whatever, any credits in the books of accounts. Okay, if you offer no explanation to the officer, or the explanation which you offer is not a satisfactory, I repeat, either you do not offer any explanation to the officer, or the explanation you offer, but your explanation is not satisfactory, that from where on planet you have got this particular credit. Okay, so if you are not able to satisfy the officer about genuineness of the credit entries, okay, then it will be deemed to be your income straight away. Okay, now section 69. Okay, section 69, 69A, 69B, all the three are on the similar lines. Understand, they are, most of them are the asset items. Okay, any investments, asset, money, bullion, jewelry, valuable article or a thing. Okay, so any of your asset items, officer, you have to give explanation that how this particular asset you have got, what is the value, what is fair value, what transaction. So you have to offer explanations that this is the asset which I have, and I have to offer explanation. If you fail to give the explanation, okay, and or the explanation that you give is not satisfactory in the view of the assessing officer, then it will be straight away deemed to be your income. Okay, further, if there are any situations where you give no explanation, and you say that you have an asset but I have no explanation for that, so from where on planet have you got the money for getting that particular asset? This is how the lawmaker thinks, and accordingly it will be deemed to be your income. So all your asset items covered. Okay, very basic things I'm telling you. 69C talks about all the expenses, no matter whether it is a personal expense, business expense, whatever. You have to give explanation for the expenses, that from you have done this a particular expenditure for an X amount, then how did you manage this expenditure at X amount, or something like that, or whether you have funded, not funded, whether it is funded out of the black money, accounted money, any questions which the officer will ask you, you have to give the explanation. Okay, so any such expenditure, if officer thinks that it is unexplained, it is unfair, then he is going to make additions to the income. Very simple as that. 69D is basically your hundi transactions. Okay, it is basically a cash loan. So any hundi transactions, however, hundi transaction language is little bit technical, but hundi transactions normally when it is carried out in cash, it will be deemed to be your income. So it is a little bit language where 69D is a unique language, but let's say that hundi incomes are also straight away taxable as the income. Now all these provisions, friends, first of all, see, I told you that I've already given you that simplified version of the material. And you see on this particular page, I have given you the simplified version with wherever some extra conditions. I will explain that afterwards. So this is one page where entire summary of 68, 69, 69A, etc. has been given to you. Okay. And in this particular separate part, see this particular part, 59, F6, F6, this particular part. Okay, so here I have already given you the barrack material, and right now our focus in this particular point is on the expenditure. Okay, so now straight away I will go to the expenditure part. First of all, see 16, very small section, but very practical and very important in real life. Now 69C, where assessee has incurred any expenditure. In our question, he has incurred the expenditure 3000. Okay, on that Kashmir trip. 1 second, let me go and check whether it is 3000 here. So actual expenditure which the assessee is showing is 3000 rupees. Okay, now you have already incurred an expenditure. Now these expenditure, let me tell you one thing repeatedly, that whether it is personal, whether it is business, whether it is anything. Okay, so any expenditure you have incurred, then this particular section is applicable. It's a very generic kind of a section. Okay, you offer no explanation, or the explanation is not satisfactory. This is a very unique language. Okay, so assessing officer thinks that the fair value of this particular expenditure is 50,000. See how, because this is also based on some judgment only, but anyway, I'm not going to the details of that. See, you are going with your wife, 5 children, 2 servants. So many people are going, for example, and you are showing to the government that you are spending only 3000. Officer is going to catch you like anything. Okay, and in this particular case, assessing officer thinks it is fair amount is 50,000. Is that very much clear? Okay, the amount covered by such expenditure or a part thereof. Okay, that means you have already shown to the government 3000. No. So what you have not shown to the government, is 47,000 rupees. What you have not shown to the government is 47,000 rupees. Okay, so 47,000 rupees is straight away going to be your deemed income. Either expenditure is completely not shown or partly shown. Okay, so both the situation is covered. So under section 69C, 47,000 straight away is your deemed income, and it will be chargeable to tax. Okay. Secondly, the same to same expenditure which is deemed to be your income, for the same expenditure you will not get any deduction under any head of income. However, our Kashmir trip is only a personal expenditure. So anyway, personal expenditure is not allowed as a deduction. Listen very carefully. However, if it was a business trip, then for business trip also this 47,000 rupees, again you will say that after all it was but for the business, so give me deduction, losses. Nah, you can't get it. Because the expenditure which are deemed to be income, for the same expenditure again you claim a deduction, is not permitted by the law. Okay, so in the given question now, let me handle this very properly. Okay, and very conceptual points, very conceptual sections, and very practical, very realistic. Okay, here reasonable is 47,000, so I'm going to add 47,000 rupees under section 69C. Listen very carefully. Okay, and these 3,000 is also personal expenditure only, no, because you are going with the family. So that also I will add. This also I will add. But all the additions which is already in my receipt payments account, that I will do it at the end, because all the items of the payment and all the items of the receipt I have to scan it. No, so the time when I scan it, that time I will do that. But I'm just showing you and telling you that this 3,000 is also personal only. Okay, so these 3,000 will be added, but because it is a personal expenditure, that way it is added. But 47,000 will be added under section 69C. Now, this is very important, friends, that you show separately additions done under section 67C. Okay, reason is that there is a special rate of tax. There is a special rate of tax, okay, for this type of incomes. However, when I do that chapter of special rate of tax, separately these kind of situations will already come up for the purpose of discussion. So I'm not going to do tax liability calculation right now, because these are initial questions of business income. That is the reason you need to show, first of all, in your mind it should be very clear that how much you are adding by virtue of 68, 69, etc. provisions. So 69C, how much you are making the additions. These amounts should be very, very clearly printed in your mind, so that if there is a question which asks you to calculate a tax liability, then for such incomes, special rates of tax, mamma mia, is to be applied. Okay, so point number 5 is already answered. Okay, personal drawings is considered to be short by 50,000. Officer considering status and style of the living. So this is basically your intangible additions on the reasonable grounds and all that. Courts have always said that yes, this is permitted. So you cannot say that this is hypothetical, this is presumptive. No, nothing of that sort. On a reasonable ground, such additions can be easily made by the officer. So there is nothing wrong. So add 50,000. Okay. Further, 7. Penalty is paid to the customs authority for not declaring the gold. It was brought from Dubai. He visited Dubai for professional work, but foreign trip expenditure are not recorded. The Dubai traveling expense considered reasonable, that is 65,000 rupees. Okay. Now, first of all, what is the data which is already available to us in form of a Dubai trip? Let me check in the question. 1 second, let me erase all that. Is there any of this particular data about okay, payment? See, this is one of the point which is penalty to the customs authority, that is 5,000. Okay, this penalty is 5,000. Okay, and is there any Dubai traveling expenditure which is given? Let me check. Okay, so that is not separately given. Okay, so penalty is paid to customs authority for non-declaring gold that was brought from Dubai. So non-declaration of a gold, that is basically offense. That is something which is wrong. You should have done. You are a chartered accountant, so you should have not done that. Yeah, you have purchased gold from Dubai. It is okay. Pay the custom duty. No. See, customs law is pretty simple. Just pay the customs duty. That's it. See, fiscal laws. Basically, you don't have to worry. You have to pay the duty, tax, and all that. And it goes, but he didn't declare. So this penalty will come under explanation to section 37, whereby which we will say that it is prohibited under some law for the time being in force, and for which you have claimed this particular money. So that 5,000 rupees, I will make the additions. But that 5,000 which is already in the receipt payment, I will add at the time when I am doing receipt payment. So I'll keep it in mind. But right now, if you want to say, okay, add 5,000. Okay. Secondly, he visited Dubai for professional work. So he had visited Dubai for professional work. The foreign trip expenditure are not recorded in the books. Mamma mia. You are spending the money and you are not recording this money in your books of accounts. So what does the lawmaker think? Lawmaker will think. Supposing if somebody is, say for example, very high post of income tax department, what he will think? Man, you are spending how much? 65,000. From where did you get the money? You show me the money. You might have given some check, no, for this 65,000. Then show me the check transaction. From which account you have given. So these are all very root questions. And if you are not able to give the explanation, then ultimately section 69C pops up. And it says that this expenditure is unexplained expenditure. And I will make the additions of the entire amount of 65,000 in this particular question. Okay, I will make the additions. Reason being that it is unexplained. You are not able to show me the proof, document, voucher. When did you go? how many dollars you might have taken for the traveling, all the details you want. No, so you don't have the details, 69C is waiting for you. So 69C, 65,000 rupees, add straight away. I already told you that you should know very clearly that if you are making additions under 68, 69, etc., it should be a separate breakup which should be given and should be there in the computation, that additions made under this section. Reason I am telling you once again, it's a repetition because there is a special rates of tax for these type of incomes. Okay. Now, this is a business trip. It was already for the professional work. So you will say that if you are adding 65,000, you reduce also 65,000 because after all it was for the professional work. You might say like that. Okay. So basically the loss is the same to same expenditure, you cannot get it as a deduction. Same to same expenditure, you cannot get it as a deduction. So I'll just add, although it's a business expense, but now you cannot get the deduction. So add 65,000 to your computation. Okay. And at the end, you will take the total of all that. Yeah, don't worry about totals now. Point number 8. Miscellaneous office expense includes stationery expense at the end of the year. Miscellaneous office expense includes stationery expense at the end of the year. When he was taking the inventory of his stationery, the court fee stamp of 220 rupees were found to be short or lost. Okay. Officer is of the view that it should not be allowed as a deduction since it is not used for the professional purposes. Very beautiful point. Very beautiful point. Okay. See, in general, it is income minus expense. Okay. Miscellaneous office expense. So let me check miscellaneous office expense. Where is that? Okay. Miscellaneous office expense is this figure. Okay. Basically, you are already showing 1,500 rupees as outflow, out of which question mark is on 220 rupees. It is for some court fee stamp, but this much of court fee stamp is missing. Okay. So what officer is saying that since I already have the data that 220 rupees is missing, to that extent you have not spent only for the business purpose. You have only lost it. This is basically a loss. You have lost it. Okay. So it is not an expenditure. I repeat, it is not an expenditure. See section 37(1), it refers to where assessee has incurred an expenditure. So where is the expenditure? 220 rupees you have not spent but for the profession. It is basically something which you have lost it. And something which you have lost it is not an expenditure. It is not the money that you have spent but for business and profession. So this 220 rupees, officer says that I am not going to give you the deduction. Fair enough. Okay. But the courts have said now. Now listen to the judgments. The courts have said, rather there are good number of Supreme Court case laws. Section 28 says that it should be profits and gains. Profits and gains. Okay. The profits and gains generally means income minus expenditure. No doubt about it. The general meaning. Okay. But whatever the money that you have lost in the ordinary course of the business, I repeat, the money that you have lost in the ordinary course of the business. That means while doing the business in the ordinary course, you lost the money. And it is not capital in nature. I repeat, it is not capital in nature. Not capital. Okay. And it is in the course of the business. Okay. Then it should not even be personal. That means it should not be something which is pure, some of your personal items. For example, if you have your some personal assets and that has been lost, that will not be covered. So it has to be linked with the business. Then it should be in the course of the business. Then you should have really lost the money. Okay. There should be a real loss. Okay. And it should be something which is not illegal or something like that. Apparently, it should not be like that because for illegal business losses, there is a separate discussion altogether that I will do it separately. So, on the prima facie, in the course of the business, it is in the course of the business, and therefore, the monies which are lost should be allowed as a deduction. That means there is no question of any disallowance because profits are to be calculated on a reasonable basis by default, and the monies lost in the course of the business which are not capital in nature is permitted. So these 220 rupees are permitted as a deduction. Now, here I don't require any adjustments because these 220 rupees is already included in the miscellaneous expenditure and it is already there in the receipt payment account. And that's the reason I do not require any adjustment for this particular money. Okay. And it is not even capital. See, for example, if it was a company and there was a loss of plant and machinery, loss of capital asset, then I will say, no, I cannot give you the deduction. Something like that. But this is chartered accountant in practice and some court fee stamps. So this is not a capital outlay and therefore it is allowable. However, it is already there in the receipt payment account. That is the reason I do not require any adjustments on this particular front. Okay. Next point. During the course of the assessment officer observed that he has taken a loan from Mr. Ghotala, which is bogus. So loan is bogus. Mr. Ghotala has given a statement to the officer that he is a name lender and not a money lender. Amount of loan appearing in the books is 60,000 and the interest provided in the past is 6,000 rupees. The closing balance is 66,000 rupees. So in your books of accounts, the credit figure is 66,000 rupees. This is how you have to understand. Now this credit figure of 66,000 rupees, you have to give the explanation that it's a genuine loan. But the counterparty, who is Mr. Ghotala, he is already given a confession saying that he is just a name lender and not a money lender. So section 68 directly comes into picture. Cash credits, anything which is credited in the books of accounts. And let me tell you, by the way, not linked with this particular point, but let me tell you that, okay. See, in a double entry system, there is a debit and there is a credit. Correct, no? In a double entry system, there is a debit and there is a credit. Correct, no? So, any entry will have a credit effect. And therefore, practically, friends, every transaction can be under the scanner of section 68. So basically you have to give the explanation. That's all the law is trying to say. They would explain it, that this is a genuine transaction. So you will not be taxed for that money. But otherwise, you will be taxed for that money. Mamma mia. Come on. So this 66,000. But any such situations, no. But let me tell you that in examination condition, you have to write a very good theory note saying that this is a bogus loan. It should be accepted as bogus loan. Assessee is not able to give explanation. Okay. And the reliance which is placed on the Mr. Ghotala statement is also reliable. In other words, see, any person come and give any confession to the government officer, that doesn't mean that confession is also always true. Correct, no? Because there are two parties to the transaction and one person is giving a confession. That doesn't mean that confessions are always true. Doesn't mean that. So, a lot of practical discussion that whether my transaction is genuine or not genuine. It has to be done and it has to be carried out. And after that, you can say that I can add amount credited in the books. That is 66,000 rupees I can add. Okay. So, this point is done. Point number 10. During the year, he had constructed a house in a village whose cost of construction is 3,50,000. Assessing officer does not have any doubt about genuineness of the cost of construction. Okay. So, cost of construction, it is 3,50,000. Officer does not have any doubt about genuineness of the cost of construction. So, in fact, this 3,50,000 is in situation of section 69, 69A, etc. Okay. But basically all the asset type transactions. But assessing officer thinks it is reasonable. It is genuine. So, nothing wrong. So, if things are genuine and officer doesn't have any doubts with respect to the taxability of this particular money and the valuation of that particular asset, in that case, I do not require any adjustments because under 68, 69, etc. provision, only when it is not genuine, it is not explained or explanation is not satisfactory, then only sections will be invoked. Otherwise, if things are okay, you don't require any adjustments. Okay. Compute the income, etc. So, we have done all the adjustments. Now, we will go to each and every items of the receipt payment to proceed to complete the computation of business income. Okay. Okay. Now, first of all, on the payment side, see, salary is for the business. Now, rent you are paying, so hopefully this particular rent is also but for the business, not clearly stated whether rent of the house or rent of the office. So let us believe that it is a rent of the office. So it's okay. Telephone expense is business, professional expense is business, motor car expense. Okay, that is also business. Then miscellaneous office expense is also business, but whatever the adjustment points we have already taken care of separately. Now, purchase of car, this you have to add because the purchase of car is a capital outlay. Okay, so these 80,000 you have to add. However, depreciation on that you have to less. So depreciation I have already told you. So add this. Now, advance income tax, which is 12,500, it is not permitted. So add. Personal expense, it is clearly printed personal expense. So personal expense you have to add. Okay. Entertainment expense. Okay. Now entertainment expense. Now this entertainment expenditure always, there is a practical doubt about genuineness, that what kind of entertainment. But if it is in the course of his profession, like he is going out with his clients to some restaurants for lunch or something like that, and at the time when he was in the official assignment, so that way you have to give a lot of justification. But it is but for the business profession, so that's okay. Now, house property related expense. Okay. So house property, you already have a 8 months rent. You already have a municipal value, which is given to us. Municipal value is 42,000. The municipal value is 42,000. Okay. So that you will have to consider in house property computation. Okay. Now, in the house property, actual rent is for 8 months. These are all house property related expense. First of all the items while doing business income computation I will add. So first of all, let me just say add 6,000. Add these repairs also 6,000. Insurance also you have to add. Okay. All the three house property related expenditure you have to add. Okay. It's a rental income. Rental income will be covered by house property chapter. Okay. Now I will do that house property computation. Just wait for a while. Collection charges is but for the business and profession it could be, but what kind of a collection charges is this? Because you are a chartered accountant into practice, so there will be a doubt about this particular collection charges, that which money you are collecting and for which there is supposing if it is a collection charges directly linked with your profession, I will say okay, it can be allowed as a reduction, but otherwise you can add it. Okay. So here I have a double mind actually, but I have to write a clear note, but I will say okay, add. So add. Okay. But I have a double mind about the 600. Penalty for the customs authority, 5,000 I have to add. Okay. Because that discussion you have already done. Bribe to income tax clerks. No. Not allowed. This is something which is prohibited under some law. So explanation to section 37(1) will come. Sorry, you cannot do that. Now, Kashmiri tour with the family is a pure personal kind of, so that 3,000 rupees also you have to add. Okay. And whatever that separate fare figure and all that, that also you have to add. So that we have in fact already completed. Okay. Now come on the receipt side. A balance brought down we have already considered by taking that difference. Professional income is okay, 1,90,000 is okay. House rent for 8 months. House property computation I will do it at the end. Share of income from HUF. Okay. This particular share of income from HUF is already exempt. So I have to remove this. Just like share of profit from a firm is not taxable, even this share of income which comes from HUF, because HUF is by itself assessable. So that is no question of any taxation coming about the share of income. In fact, there is nothing like share from HUF, but anyway, question is worded so typically. I will say excluded. Share of profit from the firm is also exempt, so that I have to reduce it, less it. LIC policy maturity with bonus. Okay, I will also less it. However, LIC policy, old policy, new policy, there are some conditions under section 10. However, that exact data about LIC policy is not given here. So we can by default say that, okay, it's a exempt policy and it is not chargeable to tax. Okay. So this is your situation. Now house property. House property, your house rent is for 8 months. So that is 32,000. So 8 into 4,000 per month. Okay. So your annual rent will be 12 into 4. That is going to be 48,000. Okay. Your municipal valuation is 42,000. Parent is not given to us. Standard rent is also not given to us. Actual rent is 32,000 rupees. Okay. So your fair rent is going to be 42 or 48, whichever is higher. So 48. Okay. Now actual rent is less. If you think and if you assume that actual rent is less because of the vacancy adjustment, which I've already explained that to you in detail in the house property chapter, vacancy adjustment. So if the actual rent is less because and due to vacancy, that means see 8 months you are letting the property. However, if you can satisfactorily prove it to the officer that you have intention to let it for the entire 12 months, but you could not let and there was no taker of that particular property, and because of that it remained vacant and I could fetch only 8 months rent. So there is a vacancy. Okay. If there is a vacancy, then whichever is less is going to be your gross annual value. If there is a vacancy. But if you say that no, that is not because of the vacancy and it is just vacant for some another reason, in that particular case, your fair rent 48,000 will have to be taken. So it depends upon vacancy or no vacancy. Okay. So I'll just right now do as a vacancy. Okay. So it is 32,000. So from gross annual value, okay, municipal tax paid, that data is given, that is already here, 6,000. Okay. So this is the 6,000. So municipal tax will go 6,000. Okay. Net annual value. From that you give the standard deduction and your house property income is computed. Okay. So house property income is already done on this particular front. So that's practically the end of this particular question. Okay. Now there is one last point which I want to just tell you, because there some people always what should I say, take a little bit of a debate, but I think that debate is there, but it is not so very significant. Okay. See, in this particular question, we have made few additions under section 68, 16, etc. provision, which I call it as a deemed income provisions. Okay. Now, these incomes, whether it will be categorized as your business or IFOS, that means the head of income will be which head of income. Okay. So, if I am making additions under 68, 69, etc., have I to make additions under that other sources or a business income? This is a little bit debatable. Okay. So, head wise, practically people will show the income under the head IFOS. That's a better way because it is deemed incomes. Okay. So, deemed incomes are shown as IFOS, but the special rate of tax definitely applies. So your tax liability calculations, if any, right now I'm not going to discuss that because I have some separate chapter altogether for the special rates of taxes. But those special rates of tax calculations will not matter. That means your ultimate tax liability is going to be the same only, no matter under which head of income that you already show. But better thing is that those incomes you have to show it under the head other sources.